So you want to start investing, but you don't know where to begin. Don't worry, you're not alone. Welcome to Income Mind Master, and today we're unlocking the secrets of investing for beginners. In this video, we're going to break it down and provide you with actionable steps to kickstart your investment journey. Whether you're aiming to build a nest egg, save for that dream vacation, or secure your financial future, we've got you covered. Let's make investing easy. If you're ready to take control of your financial future, hit that subscribe button, give this video a thumbs up, and let's dive into how to start investing. Alright, let's start with the basics. What is investing? Simply put, it's a way to make your money work for you. Instead of letting it sit idle, you're putting it to work with the goal of generating returns. The key is to start with money you won't need in the short term. Now, before you jump in, it's important to understand your financial goals. Are you saving for a big purchase like a home or education? Or are you looking to grow your wealth over the long term? Your goals will shape your investment strategy. Now, let's explore different investment options. We've got stocks, bonds, and real estate, to name a few. But if you're just starting out, it's best to start with something simple like mutual funds, ETFs, or GICs. Mutual funds function as collective investment pots. Many people pool their money, and professional managers use it to buy a mix of stocks, bonds, or other securities. These managers decide where to invest based on the fund's objectives. When you invest in a mutual fund, your money gets combined with others, providing you with instant diversification. ETFs, on the other hand, operate as baskets of stocks or bonds that you can buy or sell on the stock market, just like individual stocks. They often mimic the performance of specific indexes or asset classes. ETFs are flexible. You can buy or sell them throughout the trading day, and they offer diversification, making them popular among investors. GICs function as a safe savings account with a twist. When you invest in a GIC, you're essentially lending money to a bank or financial institution for a fixed period. In return, they promise to pay you back with interest when the term ends. GICs are low risk, making them a safe bet for preserving your money, but returns are generally lower compared to riskier investments. Your choice depends on your risk tolerance, investment goals, and how involved you want to be in managing your money. If you want market exposure, mutual funds and ETFs are viable options, while GICs suit more conservative investors aiming for stability. Now that you have a basic understanding, let's talk about practical steps to get started. Step 1. Set a budget. Know how much you can comfortably invest without affecting your daily life. Step 2. Do your research. Understand the investment options available. Read, watch videos, and educate yourself. The more you know, the better decisions you can make. Alright, you're almost there. Now you need to choose an investment platform. There are many user-friendly platforms out there that make investing a breeze for beginners. Pick one that aligns with your goals and offers educational resources. Once you're set up, start small. It's okay to dip your toes in with a modest investment. Over time, as you become more comfortable, you can increase your contributions. And there you have it, a beginner's guide to investing made simple. Remember, the key is to start, stay consistent, and let time work its magic. If you found this video helpful, don't forget to subscribe, hit that like button, and share it with someone who's also ready to take the plunge into investing.